what problems does that create when you own a 49 unit in one city, a 69 unit in another, and what are some of the issues that we were dealing with, and what have we kind of done to fix that?
Yeah, so I think economies of scale that is super important in this business in general. And it's really hard to create economies of scale when you have a small amount of units in a market that's away from your other assets. So if you think about beneath the surface, you really, once you get into a deal, now you have people on the ground that have to run it. Well, if you know how certain people work, and then in a different market there's new people and you don't know how they work, now you have different operational issues. You have to cater to both sides, right? So that goes far. It can go into construction, can go on the actual operations, your property manager, regional manager that's overseeing other people. It just increases your risk level and makes it a lot harder to run the assets, especially from a distance.
Yeah, it really does. I mean, issues just in finding proper managers and getting them interested in a small, whatever, 49 unit is a challenge. Versus if you have 3 properties totaling 200 units, you can now interest even a property manager who won't touch anything under 100 units, but there's 200 units, and now you can attract that kind of person. You can share managers across different properties. You can share leasing managers, construction, any kind of thing. There's a lot of economies of scale that we underestimated early on. Now, I just got to say, just if you're listening, watching this stuff, it doesn't mean that you should focus like a laser on like one particular submarket, because if you're that specific, it may take you years to do a deal. So you have to be a little opportunistic, and you do want to trigger that law of the first deal. That is very important. And I got to say, as much as I, kind of lament having done some of these deals, Garrett, on the other side of that coin is that we wouldn't be where we are today. And you gotta look at it that way as well. So yes, go deep as soon as you can, but at the same time, we wanted to grow our portfolio as well. So there was that tension all along.
The one way you could probably avoid it is, if you can break into a major market where there's more inventory available in the beginning, that could help. Definitely don't do like Michael said, do your first deal, of course. But if you can be strategic around making sure you're in a market with enough people, enough inventory, enough tailwind behind the market, start there maybe with your 5th unit and then build out. Now you have other opportunities on the inventory side. And, a really good example of this is we wanted to break into Atlanta, and we're like, well, this deal, we found a really good one. It's only 130 units. We got to find, I knew in the back of my mind, I was like, we need to find another deal right away nearby. Sure enough, manager at one of the deals wasn't working out.
Yeah.
We had the manager with the other deal that was really good go and oversee both of them. We wouldn't have been able to do that if we weren't in the same market with those 2 assets. And we had the foresight to have 2 deals by each other to be able to accomplish that.
Yeah. On the other hand, we're in another city where we have 56 units. The only property we have in that market. We never, we don't love the market enough. The market's not big enough really to get a lot of deals. And you're attracting kind of a mediocre property manager. And we only have 56 units. I can't get a professional management company to go and manage a 56 unit. They want 100 plus units. Now, if I have 356 units, got a total of 150 units, I might be able to interest them. And that's really the issue. It kind of handcuffs you a little bit, and then the results are going to be less than optimal. So you're investing out of area, which is the topic of our podcast today. Try to get scale as quickly as possible. Find a market where you can establish a scale. There are some markets that are really great, emerging tertiary markets, which are fantastic. But if you want to do, let's say, analyze 2 deals a week to kind of get your deal flow going, you got to make sure you're looking at a market that sustains that kind of deal flow. So, for example, we love Huntsville, Garrett, one of our favorite markets. It's just not a very big market. So it's not like you're analyzing 3 deals a week. You're like, I wish Huntsville was 3 times bigger, And so you got to pick a market where you can have the deal flow and where you can kind of go deep in a market as well.